What is called bid and ask? That is the price and quantity. Bid and ask in market terms means the demand and supply for the particular stock. The spread is the difference between the bid and ask is called as spread. So this is the bid and this is the ask price. So this is for the call side, this is for the put side, bid and ask. So the difference between the bid and ask is called the spread. So what is called bid size? Quantity of a security someone is willing to purchase at a specified bid price. Ask size, that is the quantity of a security someone is willing to sell at a specified price. Ask quantity represents the total number of sellers in a particular strike who are willing to sell at a specified ask price. So in short, the bid and ask data helps to visualize the available prices and quantities for the particular strike. Near to the bid and ask is the LTP and change in the LTP. What is LTP? LTP means last traded price and changes in LTP, that is called the change. This is the LTP for the call side. This is the LTP for the put side. So LTP is actually the premium of the option at a specified strike price. So what does LTP represents? LTP represents the premium amount of an option contract. So here this is the Nifty options. So strike price we can see here, that is 17,050, 17,100. So when you look into the call side, LTP is more and the put side LTP is very low. Change in LTP. Change in LTP represents the percentage change in the premium of a contract from previous day's closing price. This helps to understand whether the options are cheap or expensive. The next element is volume, which we all are familiar with. In simple words, volume refers to the number of contracts. That is, number of contracts traded hands in a given period or the number of option contracts bought or sold in a given trading day. The next element is implied volatility. Implied volatility is the market's forecast of likely movement in the securities price. Implied volatility usually increases in bearish markets and decreases when the market is bullish. The final two elements are open interest, that is OI, and change in the open interest. Open interest is the total number of outstanding derivative contracts such as options or futures that have not been settled for an asset. That is the meaning of open interest. Both volume and OI are the two technical metrics that helps to describe the liquidity and activity of options and future contracts. In terms of option, we will be looking only into the open interest. The next main point is with whose perspective should we look at the option chain, sellers or buyers perspective. We have to look the option chain from the seller's perspective. Why? Because the sellers are usually someone with big money or the big institution and we call it as a smart money. Option buyers are usually the retail traders and it is convenient to do option buying with less capital. The seller of the call or put option normally has non-affirmative view of the stock. For example, the seller of the call option does not expect the price of the stock to go above or at the certain price level. The seller of the put option does not expect the price of the stock to go below a certain price. Sellers are usually smart money. For sellers, there are unlimited risk and in order to be an option seller requires more money. How does the changes in open interest occur? If both the participants are initiating a new position, the open interest will increase and if both the participants are squaring off the already existing position, then open interest will decrease. Okay. So, if one participating and initiating a trade and the other is squaring off the trade, open interest will remain unchanged. Say for example, here this is the trader A buys a 5 contract. So, the open interest will remains as 5. Okay. And the next trader, that is a trader B, buys 3 contracts. So, here the open interest will change from 5 to 8. That is 5 plus 3 is 8. So, the open interest remains as 8. The trader C, he is selling 2 contracts. So, the open interest will goes to 10. That is already we are having 8 open interest. Now, this trader C sells 2 contracts. So, the open interest increased to 10. The open interest is 10. Okay. So now the trader A, he already bought the 5 contract. So he is selling that 5 contract. That means he is closing his position. So the open interest changed to 5. So 10 minus 5 is 5. After that, trader C, he is squaring off his position. He bought the 2 contracts, that is already sold the 2 contracts and he is buying the 2 contracts now. So 5 minus 2 equals to 3. The trader B, he already bought 3 contracts. So he wants to square off his position. So he is selling the 3 contracts. In that case, the open interest remains as 0. Open interest will come to 0. What are the uses of open interest? Open interest helps to identify the support and resistance levels. Also, combining the interpretations from open interest and change in open interest can give the meaningful results. Open interest helps to determine the direction of the trend and the market sentiment. What the strike price is showing us, let us understand in detail. A strike price can reveal any one of these, that is long build-up, long unwinding, short build-up or short covering. We can understand what is long build-up. Here in this picture, this is the option chain. Okay. So long build-up means if the OI is increasing, that is here it is mentioned the OI is increasing and also the price is increasing, means that is called long build-up. That is open interest increases and also the price is increasing, means the view is bullish for the market. Long build-up on call indicates that there is a bullish sentiment in the market, and long build-up on the put indicates that the bearish sentiment, that is negative. What is long unwinding? The open interest is decreasing, price is also decreasing. That is decrease in the open interest and decrease in the price, the view is bearish to the market. So what is mean by open interest, that is OI is decreasing, means open positions are being squared off. Price is decreasing means long open positions are being squared off. What is called short build-up? Here we can see that the OI is increasing. Okay. At the same time, when you look into the price is decreasing. So the open interest increases and the price is decreasing, means the view is bearish. So this is called short build-up. In short build-up, if the OI is increasing means new positions are created. The price is decreasing means what? The new short positions. What is called short covering? OI is decreasing and the price is increasing. Okay, here this is the change in OI. So we can see that this is decreasing and the price is increasing. So open interest decrease plus price increase. What is the view? That is called bullish view for short covering. OI decrease means existing open positions are being squared off. Price increase means open short positions are being squared off extensively. How the relationship between the price and OI gives us an idea about the sentiment of the market. Now we can see how to identify the direction of the market for CE and for PE option. So this is for the call option, that is for the CE. So if the increase in the CE price and also increase in the OI means the view is bullish, that is called long call build-up or call buying. Decrease in the CE price and increase in the OI means view is bearish, that is call writing or short build-up. Increase in the CE price and decrease in the OI, that is fall in the OI means view is weak bullish, call unwinding or short covering. Decrease in the CE price and decrease in the OI, fall in the OI means view is weak bearish or long liquidation. What is the view for the put options, that is for PE? If the increase in the PE price and OI also increasing means the view is bearish, that is long put build-up or put buying. Decrease in the PE price and rise in the OI, that is increase in the OI, view is bullish, that is called short put build-up or put writing. Increase in the PE price, fall in the OI, that is weak bullish or put long unwinding. Decrease in the CE price, fall in the OI, that is decrease in the OI, weak bearish, that is short covering or put buying. Now we can see how can we compare the CE and the PE options. So first is call writing increases and put writers are squaring off. The view is bearish to the market. Call buyers squaring off the positions and put buyers are increasing. The view is bearish. Call buyers squaring off, put writing increases means the view is bullish. Call buying increases, put buyers squaring off. Also the view is bullish. In the next video, we will see what is put call ratio and its significance. Along with that, how to analyze the short covering and long unwinding. Hope you have learned something new from this video. So those who haven't watched the part 1 of option chain analysis, you can watch that video, and after that you can watch this video too. This is my Telegram channel, Trader Chitra, currently having 6,557 subscribers. So today I have shared that Nifty 19,398 is a strong support. Nifty long above 19,460, and after that, once Nifty touched the resistance, I have told to book the long, that is 19,514 is a major resistance. So here, this is the channel where I used to share the Nifty and Bank Nifty levels every day, and live analysis also I used to share here. So this is a free Telegram channel. Those who are trading Nifty and Bank Nifty can make use of these levels and they can join my channel. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.